Hello, everybody. It is Kanisha, the Beauty CPA Coleman, and I help beauty entrepreneurs save money on taxes. And I do that with tax planning and bookkeeping services. So happy Good Friday, everybody. I am happy that I am joining you. It feels like it's been a little minute. I think last time I came on live, it may have been like almost 2 weeks ago. Forgive me for that. Y'all know it is it's tax season. It's busy season for me. And so I've been like super just focused on getting the tax returns done and reviewed and to all of my clients. And then it's been like a ton of tax changes too. So I've been keeping up with that as well. So thank you so much. These earrings, they're H&M. I love me some H&M for earrings, y'all. So I got these from there. One even too like expensive either. So thank you. But yes, it's been a little minute. I wanted to hop on real quick, just to answer some questions I've been getting and to really, really hone in on maximizing your tax deductions. Be sure to maximize those tax deductions, guys. Okay. If you've been looking at some of my posts lately, I've been dropping some information on some commonly overlooked tax deductions that when I'm seeing returns, and I'm seeing the information that you all are providing to me to prepare your return, I am not seeing any information for some common tax deductions, and I'll go over those real quick. Let me just do a couple of housekeeping items. First and foremost, anytime I go live, I do multi-stream. So in the case that you're watching on Instagram or Facebook and you see me like doing this, it's because I got two cameras looking at me and I'm trying to talk to my Beauty CPA Facebook group. I'm streaming into that group and I'm also talking to my Instagram community as well. So that's why I'm like switching back and forth. Number two, if y'all got any questions, feel free to drop them in the comments. Do them as they pop in your head. Okay. Don't wait to the end. I don't want you to forget. I don't intend for this to be long because it's Friday night. I mean, I know y'all don't want to be looking at me on a Friday night. Y'all should be out living your best life. So, um, so drop your questions or comments right now or as they pop up so that I can address them before we end the session tonight. And then number three, the really, really, really big one. If you still are looking for a tax professional to prepare your returns, hit that first link in my bio. Get on the calendar so we can have a quick chat. It's only about 15 minutes or so I get to know more about you and your business, and I can give you a quote right then and there, as far as what the required investment would be from you for my firm to prepare your beauty business tax returns. So hit that first link in my bio, y'all. 15% off is still going on. Still going on. It won't be for much longer. Y'all remember it was supposed to be an early bird special, and the IRS has pushed back the tax return due date, right? It was April 15th, now it is May 17th. But eventually it ain't gonna be early no more. So that offer will end. So please, if you are looking for a tax professional and you want to chat with me about preparing your 2020 tax returns or whatever year you need to do to be caught up, hit that first link in my bio. 15% off tax prep for new clients is still going on. Okay. All right. So let's get into some updates. I do have just two, and I'm going to remind you of one. So I have three updates, and then we're going to go ahead and get into the topic today. I'm just looking for like a blank sheet of paper so I can keep track of questions. First and foremost, like I said before, the tax return due date has been pushed back 1 month, right? So it was April 15th. It is now, the due date is May 17th. If you have not filed an extension yet, just go ahead and do it. Even if you don't plan to be late, even if you don't think you need the extension, just do it anyway. Why not? I mean, it's free. It takes like 5 minutes to do, and it gives you an extra 6 months. You just never know what comes up. So I encourage all of you, if you have not prepared your return, go ahead and file the extension just to be on the safe side. Number two, for due dates, for any of you who are in Texas, Oklahoma, or Louisiana, because you guys had that like snowstorm earlier this year, the IRS is giving you guys till the middle of June. So you guys have June 15th. And if you file an extension, you'll go into October the 15th. So Texas, Louisiana, Oklahoma, y'all got a little bit of, IRS is trying to show y'all a little bit of grace. So remember that. But again, like I said, you just never know what happens. Go ahead and file the extension. Okay, update number two. PPP has been extended 2 more months. It was supposed to be over May 31st, y'all. It's supposed to be over on Wednesday. But they still have money left. Shocker. They still have money left for that program. So if that's something that you wanted to take advantage of, you have until May 31st or whenever they run out of the money, whichever comes first. Now, I know it was like some confusion around who can go get that money. If you got a first draw last year, can you go get more money? Yes, you can. You can get a second draw. They also changed the formula for my sole proprietors, for my single member LLCs, and my partnerships. Because you are not technically on payroll, right? You had to apply to the program using net profit. Well, now you can apply using gross income, which is awesome because that means that you can get a bigger forgivable loan. Yes, I did say forgivable, which means, y'all know what that means. That means this is free money. This is free money. Do not miss out on free money. So again, do not wait. Go ahead and apply for that loan. The closing date is May 31st or whenever they run out of money. So I do have a question. Can you still apply for what if you are starting your business this year? So like in 2021. Unfortunately, I do not think that you can go for the PPP. The last thing I heard was that your business had to have been started by middle of February of 2020. So February 15th of 2020, your business had to have been started by then to apply to the PPP loan program. If I hear anything different, if they change anything, I will let you know. Everything is ever changing, guys. Remember that. Like these tax laws and these programs, they're changing. So if anything changes with that, be sure you will hear it from me because my ears are always open. My eyes are always reading and looking out for the news for y'all. So just watch out for that, okay? Now, what is I have a third update. Third update. And this is a reminder because I've said it before. Remember, when you're preparing your tax return this year, guys, unemployment compensation is usually taxable. However, you can exempt the first $10,200. So the first $10,200 is tax-free. Tax-free, y'all. Now, I know some of you were super duper proactive, right? And when y'all apply for unemployment, y'all probably was like, oh, just take these taxes out so I ain't got to worry about it. Well, now, if the first 10,200, you can get that back. You can get those taxes back that they withheld. So remember that. First 10,200 is tax-free. If you didn't even get that much, all of that is tax-free. You shouldn't have no taxes on that money. Now, I know a lot of you was like, well, I filed my tax return already and they took my taxes. How am I going to get back? Here go the word on the street. Word on the street, and this is legit. Word on the IRS streets. Okay, IRS said this. Word is they are going to be automatically issuing those refunds. So if they took your tax money because you filed super early this year, they were going to start sending those refunds out starting in May. I don't know when in May. May is a long month. It's 31 days. They could start May 31st. Who knows? But they said they will be automatically sending you guys those refunds starting in May. So those are my updates. Those are my updates. I do got a few others, but I don't want the updates to take up most of the session. So maybe I'll schedule another session before the weekend is over. Who knows? Okay, let's get into what I have to talk about today. And this will be super quick. I just want to keep honing this in, keep reminding you all the most easiest way to minimize your tax bill. The most easiest way to minimize your tax bill is to maximize your tax deductions. Maximize your tax deductions. Let's clear up some misconceptions about tax deductions because there are some. They're awesome. And I am bringing this information to you, and this is based on the questions and conversations that I have in private or in my DMs or in my inbox from your beautypreneur peers. So let me clear up some things for you, and hopefully that will kind of free your mind and encourage you to really, really take advantage of your tax deductions when it comes to your beauty business and filing the tax return. Okay, so misconception number one, I lost the receipt, so I can't take the deduction. Not true. Take that deduction, okay? You know you spent the money, you know it pertains to your business, so go ahead and take that deduction. I know a little part of that is scary to you, like, oh my God, but what if I get audited? And what if they, what if they ask me and I don't have the receipt? There are other ways to prove out an expense on the tax return. There are other ways, okay? But for now, I just want you to know while we are in tax preparation season, if you come across some information in your bank statement or just money you spent on your business, you spent it, you know how much it is, you know where you bought it from, you just can't find that piece of paper, that receipt, still take the deduction on your tax return. Number two, some of y'all are calculating y'all financial data and y'all are finding that, oh my God, this tax deduction is huge. It is too much. It's $5, $6, $7, $10,000. Oh, I'm not gonna claim all of it, or I'm not gonna do it at all because it looks too big and I'm gonna get audited. Don't do that. Still take the deduction, especially if it's legit. Like, yeah, you spent $10,000 on coaching to develop your beauty business this year. And it may seem out of place in relation to the other expenses because it's very large. So what? You spent the money. It relates to your business. So take that deduction, y'all. Even if it does stick out like a sore thumb, and it looks really like a big red flag. Just make sure you got your documentation in place and you know you can prove it out, but still take the deduction. Do not take a deduction just because it was large. You spent the money on it. Go ahead and do it. All right. Okay. Number three, a lot of you are concerned about red flags. A lot of you are concerned about red flags. For example, I have a client that thinks that the home office deduction is a red flag. And that's just the home office deduction and any other red flag that you've ever heard of. They are not red flags without proper context. Okay, let me explain that a bit. A lot of you, I don't know if you're newer and you're just now getting to know me. If you are, welcome. But I spent the first 8 years of my career as a revenue agent for the IRS. So I was an auditor. I audited small, mid, and large size businesses. So I still have that auditor's brain. Okay, there's no situation where we will not we, because I don't work there no more. But there's no situation when I was an auditor that we look at returns and automatically audited them because they have home office. Usually it was like they have a home office, and then there were several other things that seemed out of place in addition to the home office, right? Like you got a home office and you ain't got no business. How you gonna do that? How you gonna do that? Okay. So, or if the home office seems unusually large in relation to other areas of the tax return. I won't get into the specifics. If you want to have that conversation with me, just hit that first button in my bio. We could hop on a call and we could talk about it. But please know, whenever you hear about a red flag for the IRS, it is not the issue by itself that will get you audited. It is the issue and much larger other patterns of unusualness to your return that's going to get you audited. So please don't listen to the barbershop talk. Don't listen to your non-tax working friends, family, whatever, neighbors. Don't listen to them. Okay? All right. So, another thing I want you guys to really keep in mind is that your success in maximizing your tax deductions is directly related to how good your bookkeeping is. How it is directly related to how good you are tracking expenses. Because you cannot manage and you cannot deduct what you do not track. You just can't. You are not going to remember right now in April of 2021 what you did 365 days ago in 2020. You're not going to remember it all, right? You're going to forget the little things. And the little things add up to a bunch over the course of an entire year. So when I say maximize your tax deduction, one, be more aggressive. Two, stop being scary of the IRS. They do not have a hit list. I promise you, they don't. And then number three, you got to start tracking your expenses because you can't deduct what you don't track. You cannot deduct what you don't track. You can't deduct what you don't track. So, what are my tips on tracking expenses? You got to do bookkeeping. You got to use an Excel spreadsheet or you got to use an app. I myself, I like QuickBooks, but there are many other options out there. Okay? You got Xero, FreshBooks, Wave, many other ones. But you have to start tracking these things. You have to start tracking them. Track them electronically. Don't track on paper. Paper get wet, paper burns, paper gets lost, crinkled, whatever. Track them in a spreadsheet, host it in the cloud or QuickBooks. You got to do it. Number two, get a business bank account and then connect that bank account to your bookkeeping system so that you're using one card, one account for all your business stuff. It's connected to your bookkeeping system. Right? Or if you're using Excel, you have somewhere to go to pull all your business data and then you're tracking it. You're keeping up with it. You're categorizing it at least once a month throughout the year. Remember, y'all cannot maximize tax deductions if y'all ain't tracking those expenses in the first place. Okay? Let me clear something up. I hear this a lot. Beautypreneurs that are providing services to clients. Clients are booking with you. Your scheduling app is not a bookkeeping system. It may track your revenue, but it is not adequate enough to track your expenses. It cannot categorize your expenses. It cannot produce financial statements for you. It cannot do that. So let me repeat myself. Your scheduling app, your scheduling software is not a bookkeeping system. It may track your revenue, but it cannot track your expenses. It cannot categorize your expenses, and it cannot produce financial statements. Why do I prefer QuickBooks? That's an excellent question. I like QuickBooks because QuickBooks talks to a lot of other systems. It talks and integrates with more systems than the other small business accounting solutions. What do I mean by talk to? I mean by integrations, right? So like if you want to integrate your business bank account, Stripe, PayPal, Square, and a ton of other systems, not even having to necessarily do with money. Maybe it deals with payroll. Maybe it deals with inventory. Maybe it deals with mile tracking. Maybe it deals with the whole other stuff. But QuickBooks integrates with a ton of stuff. A ton of stuff. And that's why I like QuickBooks, because if you're truly gonna establish bookkeeping in your business, in your beauty business, you're gonna use bookkeeping, and you want it to be seamless, easy, quick, you're gonna get into automation, and you need QuickBooks or whatever bookkeeping system you choose to be able to talk to other systems. QuickBooks does that very seamlessly. So that's why I prefer QuickBooks. There is another. I got a couple of questions. Somebody sent these to me earlier that I do want to make sure that I address. They're about, the first question is about PPP. Someone asked me, where do you report PPP on your tax return? Let's be clear, you don't. You do not report PPP on your tax return because remember, PPP is a forgivable loan, right? Until it's forgiven, it's still a loan. And if it's a loan, it does not get reported on your Schedule C. This person was specifically talking about the Schedule C for sole proprietors, single member LLCs. You guys file the on your Schedule C attached to your 1040. And so you don't have a balance sheet. All you have is the profit and loss statement. And if that's the case, you do not report that loan anywhere on that Schedule C. Now, if you're a partnership, you're a small partnership, you are not required to report a balance sheet. And so at that time, you still won't report that loan. S Corps, if you're very small, meaning under $250,000 in revenue or assets, you still don't have to have a balance sheet. So you're not reporting that. The only time you will report that loan is if you're required to have a balance sheet, and that's usually at the C Corp level. Then you report the loan on the balance sheet as a loan, but it has no tax implication if it's still a loan. Okay? I hope that answers her question if she's watching or she sees this on the replay. And then there was another question. I'll let him mull over a little bit, and I'll address it when I remember it, but I forgot the second one. But I do have another question here on Facebook. Okay, so you want something to track the receipts on top of reconciling the transactions and bookkeeps. Absolutely. So let me clear that up. Tracking your receipts, reconciling transactions in QuickBooks. You keep your receipts, right? You keep your receipts for your records. You need the receipts because you need to make sure that's how you're making sure QuickBooks is correct. Trust me, it is, right? Especially if you're connecting QuickBooks to your business bank account and QuickBooks is automatically pulling those transactions down for you every single month. It's getting the data from the bank, and so it's going to be accurate. But you're going to keep the receipts for your records. You're going to keep those for your records, so you know you have a layer of support. So, for example, this is why you keep receipts. The bank and QuickBooks will do all the heavy lifting for you. But if you were ever audited and the auditor says, okay, you spent $500 on supplies, let me see your receipt, that's why you need it. That's why you need the receipt. It's your underlying layer of support. But on a month-to-month basis, if you're using QuickBooks and you're connecting it to your business bank account, I don't see why you would need to handle receipts on a monthly basis, but keep them for auditing purposes. So let me wrap this up. I'll go over the 3 or 4 things I talked about early on, the important things, remembering how to maximize your tax deductions. And I might not say them in the same words, but they mean the same thing. Number 1, guys, we have got to remember you do not have to keep every single receipt to deduct something on your tax return. You know you spent the money, you know how much it costs, you know it relates to your business. Still take that deduction. Do not overpay in tax because you're scared that you lost a receipt. Number 1, okay? Number 2, even if you incur some fairly large expenses, okay? Still take the tax deduction. If you know you spent the money, you know it relates to your business, and you have support for the fairly large expense, go ahead, take the deduction. Do not let your fear of the IRS cost you money. We're not going to pay for our fear, okay? Especially if you know it's legit, okay? Number 3, you guys are going to hear about a ton of red flags. You're going to hear about it from your mama, your daddy, your cousin, your neighbor, All people who don't work in tax, you're going to hear about all these. Don't do this because the IRS is going to come get you. It's a red flag. Don't listen to them. Don't listen to them. Because the IRS, they have issues that they look out for, but you're never going to get audited just for having that one issue. It's going to be that one issue in a series of other things that will get you audited. It's never just home office. It's never just car and truck. It's never just, you know what I'm saying? It's never just one issue while they're auditing somebody. It's going to be that issue in the greater context of your entire tax return. And we can talk about red flags. Actually, maybe I should do a session on red flags so I can explain what I mean by that in greater detail. But you know, don't listen to this shop talk, okay? Especially listening to folks you know don't work in tax, ain't never worked in tax, ain't never gonna work in tax. Okay? We love auntie, we love cousin, but we're not gonna take tax advice from them. All right? Okay? And then number 4, remember this: your ability to successfully maximize your tax deductions is tied to how well you're gonna track those expenses. Okay? It is tied to how well you're going to track those expenses. You cannot deduct what you do not track. And we're not going to remember everything from a year ago. We're not going to do it. So just track it. Use QuickBooks or use a spreadsheet. I got a free spreadsheet. I forget which link it is in my bio, but it's in my bio. I have a link to a free Excel template that you can start off with just to get the hang of it and see how it's all recorded, and it'll build a P&L for you, okay? Or you can look into QuickBooks, which I like. Connect your business bank account to it. It's going to do all the work for you. All you're doing is categorizing and reconciling, at the end of the month. Okay. And then what else did I say? I talked about tracking expenses. Yeah, those are the biggies, guys. Those are the big ones. Go back and look at the post I posted in the last 48 hours. I posted like a series of 5 commonly missed tax deductions. Commonly missed. Okay. Go ahead and take a look at those. I'm sure you will find those useful. Yes, this live is going to be saved. I saved all my lives because I know y'all busy, and I always want you guys to have like a hub to come back to when you need tax or accounting information. So yes, I'm going to save this live. They'll all be saved on my Instagram, or I do encourage you guys, though, I do have a Facebook group. Where all these videos will forever be housed. And I also give like extra, tidbits in the group to help them work through their particular issues as well. So join the Facebook group. It is the Beauty CPA, Facebook group. It's the financial coaching for beautypreneurs. So I think that is all, y'all. I think I kept y'all long enough. I'm going to do that live on red flags. I think that would be appropriate next step before we move on to step 4 of 7 steps to slay your taxes. Step 4 is all about reviewing your return. I know y'all not reviewing your return. I know y'all not. But after I have this session, I think you're going to start. And I will have a mini checklist to help you do just that. So I am going to let you all go. Enjoy the rest of your, Good Friday. Have a great Easter weekend, all of you. I will see you very soon because I want to do that next session sooner than later. So just look out for when I'm gonna do that, guys. Have a great. Oh, how have you sharing the? Oh, wonderful. Yes, I'm gonna save the video. So no worries there. I save all of my videos because I know they are useful for you all if you can't make them live. So yes, have a great Easter weekend. Be safe, but have fun. And I will see you guys soon. Bye for now.